On Sunday the 16th of August, 2026, Chinese robot maker Unitree has not started trading yet, but crypto traders have already priced its shares at $93, more than 4 times the $22.37 Shanghai IPO price. The official price values Unitree near $9 billion. On Hyperliquid, a crypto derivatives exchange, perpetual futures imply a market value near $38 billion. A perpetual future is simply a contract with no expiry date that tracks an asset's expected price. Here, it lets traders speculate on where Unitree will open before the real stock market even wakes up. That means there are now 2 versions of the same company. Ordinary IPO investors bought at $22.37. Leveraged crypto traders are betting on $93, and that gap is the story today. Recent developments explain why the gap exists. Unitree is not a shell company. It shipped more than 5,500 units in 2025 and has become one of China's most visible humanoid robotics firms. That real momentum is colliding with 2 forces. First, many crypto-native traders cannot easily access Shanghai's star market, so Hyperliquid's pre-IPO Perpetuals are their synthetic way in. Second, the artificial intelligence and robotics boom has made investors willing to pay a huge premium for early exposure. CoinDesk reported on the 15th of August that Hyperliquid traders were already pricing in this 4x upside. The analytical point is that $93 reflects leveraged enthusiasm, not a sober valuation. Futures traders use borrowed money by definition, so their price tends to overshoot more easily. The current impact is a crowded long trade with real liquidation risk. Allium analysts have warned that leveraged bets are vulnerable when trading begins. If Unitree actually opens at, say, $40, far below that $93 implied price, traders who are long these perpetuals could be liquidated. A liquidation happens when a leveraged position loses enough money that the exchange automatically closes it, and forced selling can push prices down even faster. For ordinary IPO investors, the derivatives premium does not guarantee a higher listing price. It can distort expectations and pull more speculative money into an already heated debut. This also shows crypto markets moving into traditional IPO territory, bringing leveraged volatility into a process that is normally much more controlled. The outlook hinges on Unitree's actual trading debut. If the Shanghai listing opens near the $22 to $30 range, the synthetic $93 price will look stretched and Hyperliquid longs could unwind very quickly. If it opens far higher, crypto traders will look early, but closing a valuation gap of roughly $29 billion would require extraordinary official demand. Right now, there is no evidence in the current research that underwriters or institutional investors are marking Unitree anywhere close to $93. The more likely path is convergence. Either the IPO price gets re-rated upward as public demand builds, or the Hyperliquid premium comes back down. For viewers, the practical signal is clear: watch the opening auction and early volume, not the pre-listing hype. The real lesson from Unitree is not simply that robots are popular. It is that 2 completely different pricing systems can now run side by side and disagree by a factor of 4. The official IPO says Unitree is worth $9 billion. Crypto derivatives say nearly $38 billion. One number comes from an underwritten auction. The other comes from leveraged bets. When those 2 worlds meet on the first day of trading, that gap must close either through a share price surge or a liquidation cascade. Unitree has become a live test of whether synthetic markets can price traditional IPOs better, or simply with more leverage.